Next type of analysis is technical analysis. It means the analysis of the things what already happened. The price, the charts or the price traced before. Technical analysis is based on three main rules. The prices include everything. It means that all fundamental analysis that you don't even understand, you even might even not understand, you don't need it, because the prices are already included that. If the price is up, they are increased, it means that there are certain things fundamental inside that move the price up. And the same thing if it is the price down. So you just see the chart and you understand what happens. You don't need so many deals to understand, so many things I mean. The second thing to understand is the prices are moving in trends. What does this mean? It means that as soon as I would say a third part of certain people start to buy something, you see that the price increases for certain amounts, for certain goods, assets, commodities, stocks, and so on. And it increases just because people start to buy a lot all these things and they are interested, and this is connecting other people that might even not thought before about this. Like for example, when appears new iPhone, it's a trend, everybody wants to buy it, so on. The third rule is the history repeats. It means that what once was, it will for sure be next time. It means that when you see there almost all the situation in the markets, how they are moving, there are certain rules, there are certain things that this already happened before, and if you understand good history, you understand how it will move tomorrow or after tomorrow. So on all these three rules, the whole technical analysis is based. We will start with next one, with charts types. On the TV, as usually, you see some certain charts. They look like this, some waves. It is called lines charts. It's a line. Actually, what this means. We should talk actually about the how to understand the types by terms, I mean by time, because there is 1 minute charts, 5 minutes, 10 minutes, 15 minutes, half an hour, 1 hour charts, 1 day charts, one week charts, 1 month charts. But I don't think we need to waste time a lot on this. That's why I didn't even discuss about this. We don't need this. What's the idea? The idea is that this line movement was made, and it is the connection between some certain points which happen in a certain period of time. It would be different periods of time. So, and if we move a line through them, it will be the line type of chart. You see here that the price increases, yes, but it doesn't just increase, it increases as a little bit goes down, then again increases, a little bit goes down, and so on. So the line, it means the connection between these points. These points are showing the price at certain period of time. For example, every 1 hour. At 10 a.m. it was here, at 11 a.m. it was here. Until that time it would grow up, down, so on, a lot of times. But in 11 a.m. it was here, and 12 a.m. here, and so on. So every of these points are showing actually the price, how it was moving. As you see, it is not very informative. A lot of things you cannot understand from this. You see just the price at all, it's increasing, okay. But how you can use it, not so sure. That's why instead of these things appeared bars, like kind of sticks. It already includes more details inside. This is a bar type. It has 4 prices: open price, low price, high price, and close price. It means that 10 and 1 minute it was here. In 1 hour term it go down, so low, the lowest price it was here. In this term it go up, it could be for more times, and the last second of this hour, I mean almost 11, it was here, and here is already closed. If you would look on, so it has more information. If you would look on the line chart, it would be just a point here, what is closed price, because these charts are based on closed price, this one not. So in this case, this line chart, if you would compare to this bar or stick, it would be kind of this. A lot of details. Yes, it's difficult to understand sometimes, but a lot of details included that can help to understand how to trade. So this one is good because it's more informative. This is good because it's very easy. The minus of this, it is less informative. Minus of this, difficult to understand. That's why it appeared until now moment. Everybody uses, a lot of traders uses the candlestick type of charts. It is actually the same as this one, as stick. It has like open price, like this first second of beginning of an hour. It has the close price, last second. It has few shadows. It means the low price, which was still in this hour, and high price. And in this case it shows. So it is more understandable. Why? Because if the price from the moment of opening till the moment of closing it increased, it's one color, and if it decreased, for example, open was here and closed was here, it will be a different color. So in this case, for example, comparing to this one, it would look kind of that. It increased, then go down, for example, decreased, it's another color, increased, then decreased, it's another. So when you see it is very understandable. I mean, you understand, it's very informative, and at the same time it's easy for understanding, comparing to the second one. And comparing to the first one, of course, it's more informative. Okay, next thing what we need to understand, the movement of the price. You might see, you might not see, but the price moving is kind of bad. So there are some certain waves. And we understand there are like directions, because we said about trends. Yes, as you see, it is uptrend, and it's logical because it's growing. So it is sometimes growing the price, sometimes going back, but it is more going up than back, than down. That's why it is named an uptrend. What means an uptrend? An uptrend means every next top is higher than the top before. So this one is higher than this one, next one is higher than previous, and so on. And very important thing, the same is about bottoms. Every bottom is higher than the previous one. So in this case it is named an uptrend. Of course, if there is an uptrend, should be a downtrend. Downtrend should be kind of this. The same thing. Every top, okay, just reverse. Every top is lower than the previous one, and every bottom the same, is lower than previous one. This is downtrend. One more thing what we need to add here. If we take two tops and put a line through them, it will be named the resistance line. And the same thing if we take two bottoms and draw a line through them, it will be named a support line. What this means? It's kind of lines and instruments that can help in after few days, when you will understand better the markets, it will help to understand how the price, forecasting the price, how the price is moving. In a downtrend, first of all, what is important to remember? First thing, in a downtrend, we sell. We don't buy, as usual. This is, okay, you might buy because price, as you see, it is anyway increasing, so you could buy kind of this. You might think about that. You could think, but at no moment when you are at the beginning of your way of trader, it is not a good way. It's better just to sell. Why? Because it is going down more than up. This is the first thing. It is going faster by time. You'll understand this in the next lectures. So there are two things at least that tell you to sell. So it is going faster, this one thing, and it is going more. That's another thing. That's why you need to sell, not to buy. Where from you sell? The second thing you need to remember. You need to sell from the resistance to the support line. Yeah, you see, this is the support, this is the resistance. So if we sell from here till here. We don't sell here because it will increase. So we need to find the way when the price is at the closest moment, at the closest level to this line, to the resistance. So from here we sell till what level? Till the lowest, till the support. It can be here, 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 and so on. So it's one thing that it is sell, second thing it is sell from the resistance. In an uptrend, we talk what it is, but in an uptrend you need to first put the lines. So the down line, it is support line. It doesn't matter uptrend or downtrend. The line which is under the price is named support line. The line which is over the price, it is called resistance line. Just the main idea is in uptrend we need support line more than resistance. Why? Because we will buy, and we will buy from the support. These are the rules. So we buy from here, from the support till the resistance, from the support till the resistance, and so on. Two rules, you need to remember them. So we buy as usual, and second, we buy from the support, not from the resistance. That's very awesome. We understand that in an uptrend we buy, in downtrend we sell. What shall we do when it is this kind of trend? Maybe you saw this kind. Okay, like this could be. As you see, it is a flat trend. It doesn't have a direction up or down. It's kind of going horizontal. So in this case, we see how it is seen. Yeah, we see that the tops are aligned to a certain line, and it is named also resistance line. It is even named as a resistance level because it's horizontal. But it's not so big deal, not so big difference. And through the bottoms we can draw another line, it will be a support. So in uptrend we buy from the support, from here. In downtrend we sell from the resistance. What shall we do here when it doesn't go up or down? It's like stays, almost stays. So there are two ways and two decisions. Somebody could say we could sell from the resistance, and we could buy from the support, and it would be good. Somebody will say we shouldn't do anything, we should just stay and wait until it will get a certain direction, and those will be right as well. Why? The main thing what we need to remember, to know, that if the difference between these two levels is kind of till 50 pips, it means that we don't do anything. We don't buy, we don't sell. We just wait until it goes somewhere. If it is smaller, I mean 50 pips it's so-so, but for example if it is 30 pips, 40 pips, 25 pips, I mean very short distance, so in this case we don't do anything. But if it has higher distance, for example 100 pips, in this case we could do, of course, some deals. We could sell from the resistance, exactly how it's made here. For example, if we just imagine here is 100 pips, it means from this level we could make a sell, from this level we could make a buy. Till which moment? Till here, till the resistance if we buy, until the support if we sell. So okay, what happens, for example, we buy, let's take for example, the price stays like this. Here we bought, the price increases till here. We close the deal, but it goes up. It's here. So in this case, what we can do, we can buy again. Why? Because this was the resistance line until the price was under this level. As soon as the price goes over this level, this resistance line start to be already a support line, like this way, this one from down, this was a support line. So it goes here, it will be here a support line, and we will find the next level, which will be the resistance. So in this case we might buy till the next resistance, and if it goes again up, it means that this resistance is already going to be a support as well, and we might buy to the next level of resistance, and so on and so on. So that's the idea. Where from we could take those levels? As we talked before, the history repeats. The price was at those levels before. We just need to scroll back a bit, and we will find some other levels where the price already was moving through them, you know. And if you understand how to use them, so it is already some things changed. Okay, that's not enough for taking a decision to buy or to sell, but it is an element, and I wanted you to know at this moment, at this lecture, exactly that there are some certain things, geometrical, mathematical things, that could help you to forecast and to use the charts to earn money, of course. Next thing what you need. What means it goes up or down a level, the price? For example, there are a few levels, and how we can understand the price went up or down, because it's always moving. So if we take a candlestick and it closes over a level, so it means over this level, it was a resistance when the price was down, it was here a resistance, and when it break up, it started to be a support already. How you understand that it's a break up? It means that the candlestick closes over the level, and it needs to close over the level now at least 10-15 pips up. If it closes 1-2 pips up over the level, it is not a break point. You don't need to understand this as a support. So it means a fake break. A real break, it means 10-15 pips at least. I hope you understand this, but we'll see this on the workshops on the next lecture. There are also some combinations of things that we can use while trading, exactly from technical analysis, and these are connected to candlesticks. So a candle doesn't mean anything itself, its own. There are different candles. It can be, this is a certain candle. It's one color, it has few shadows upside. Here we see it's a open price, here is the closed price, here is the high price, and here is the low price. But what we can understand, there can be these kind of candles without any highs or lows, I mean without any shadows. It means that the close moment, the last moment of an hour, for example, it is equal with the highest, and the lowest moment is equal with the opening moment. Or this kind, it's named harami. It is when it is opened here, closed here. In terms of 1 hour, it went up and down. It could be more times, but in the last second of an hour it was here. Not just an hour, it's an example hour. It can be an hour, 4 hours, 1 day, 1 week, it doesn't matter. It's a time frame, but in a period of time, I would say. So what this means? It doesn't mean anything by itself, by its own, but it could mean some things if it is connected with other candles. So in this case, for example, we could use the falling star. Falling star looks like this. So for example, the price increases, and at the moment there is a small candle with a long shadow up. So in this case, it's named falling star. It's like the star is falling, and this is the trace it leaves. So that's why it is a signal to sell. The reverse figure would be this one. For example, the price goes down, and here you have a small candle with a long shadow down. It is named a hammer, and it shows buy. One thing you need to remember: the things that I now am showing to you, you don't need to start using them right now, because these things are working if they are considered together with a full strategy, not by its own. Because until you don't finish the course, you don't start to trade, okay? So these are some things that you need just to understand. That's the idea. That there are a lot of these kind of things, but they need to be included in a certain trading plan. Another thing would be some figures that move the trend at all. First of them is named the head and shoulders. What this means, head and shoulders? It's not a shampoo, it's a movement against the trend. For example, the trend increases, it grows. At one moment, the price goes down fast and goes back. So in this case, of course, at one moment it's not needed to do anything. But when it draws this kind of figures, you might see it's named, this thing is named head and shoulders. It's like this is a shoulder, this is the head, this is the second shoulder. So we might draw the neck line, and when it breaks the neckline here, we might sell. It will go down, and it will go down as much as the head is high. So the same distance kind of. So for example, we might sell till here. The same thing would be if we would see the reverse one. But here in this case we would make buy after it breaks the neckline. And we buy the same, the level, this one, the head level.